Why now is the time to dig. Booyah! Welcome, my friends, to the lightning round of your financial future. We're live from New York, and the market is a battlefield, a jungle, a high-stakes game of Texas Hold'em. You see the big names flashing across your screen every single second. The Magnificent Seven, the household brands, the titans of industry. Everybody knows them, everybody owns them. But I'm here to tell you, the real money, the life-changing generational wealth, is often found where nobody else is looking. It's hiding in the tall grass, waiting for a savvy investor, someone like you, to come along and spot the opportunity before Wall Street does. That's where the 10-baggers are born, folks. This market, right here, right now, in the late summer of 2025, is giving us a golden ticket. All right, first up, let's talk about TPI Composites, ticker symbol TPIC. Now, what do these guys do? It's simple and it's beautiful. They are the world's largest independent manufacturer of composite wind blades. Think about those massive, majestic white blades you see spinning on wind turbines across the country and around the globe. There's a good chance TPIC made them. They don't make the whole turbine. They are specialists, the best in the business at creating the gigantic blades that capture the wind's power. They partner with the big players in the wind energy space, like GE, Vestas, and Nordex, acting as their go-to manufacturing arm. Now, let's look at the chart. This stock has been through the ringer, a real house of pain for a lot of investors. It got hammered, beaten down from its highs as the wind industry faced headwinds. No pun intended. We saw supply chain nightmares, soaring material costs, and project delays. The stock price reflects that pain, trading in the low single digits. But here's the story. Here's the comeback. The company has been restructuring, closing inefficient plants, and focusing on improving profitability. Here's the verdict. For me, TPIC is a speculative buy. I'm pounding the table on this one, but with a huge caveat. This is not for the faint of heart. Buy. Next caller. Let's talk about Trinity Biotech, ticker TRIB. This is an Irish company that develops, manufactures, and sells medical diagnostic products. Think about the tests your doctor runs. Tests for infectious diseases, autoimmune disorders, diabetes, and more. Trinity is in that game. They have a massive portfolio of products, from simple point-of-care tests that give results in minutes to more complex laboratory-based assays. They sell these products all over the world, with a significant presence in the US, Europe, and emerging markets. They've been around for a while, so they aren't some fly-by-night startup. They are an established player in the diagnostic space. The stock price, frankly, has been a horror show, a complete disaster. It's been languishing deep in penny stock territory for a long, long time. This tells you that Wall Street has completely given up on the story. The company has faced major challenges, including declining revenues in some of its core segments, intense competition from larger players, and a debt load that has been a constant anchor weighing it down. So, what's the call on TRIB? This one is an avoid. I'm sorry, but I can't get behind it. The house of pain is just too great, and the path to victory is too narrow and fraught with peril. I need to see proof. I need to see several quarters of solid execution, revenue growth, and improving margins before I would even consider touching this name. For now, stay away. Don't be a hero. Let's shift gears into the wild west of digital assets. We're talking about Terawulf, ticker WULF. These guys are Bitcoin miners. What does that mean? They have massive data centers packed to the gills with powerful specialized computers, and they use them to solve complex mathematical problems. When they solve a problem, they get to add the next block to the Bitcoin blockchain, and for their effort, they are rewarded with brand new Bitcoin. Now, WULF has a very specific angle that makes them interesting. They bill themselves as the environmentally friendly Bitcoin miner. Their two main facilities, one in New York and one in Pennsylvania, are powered almost entirely by zero-carbon energy sources. The New York facility uses 91% hydropower, and the Pennsylvania one is located right next to a nuclear power plant. This is their big differentiator in a world that is increasingly scrutinizing the massive energy consumption of the crypto industry. The special sauce here is their focus on sustainable, low-cost power. In the mining game, your biggest cost is electricity. If you have cheap, reliable power, you have a massive competitive advantage. That's WULF's entire thesis. By co-locating their facilities with power plants, they get access to some of the cheapest electricity in the industry. So, what's my call on WULF? I'm going to say this is a buy. Listen to me. This is the best-of-breed way to play a rally in Bitcoin. If you believe, as I do, that Bitcoin is digital gold and is heading higher over the long term, you want exposure to the miners. And if you're going to own a miner, you want to own the one with the lowest cost of production and a sustainable energy story. That's Terawulf. Buy. All right. Let's look at a new kid on the block. Aeries Technology, ticker AERT. This one is a bit more of a classic business-to-business play. In simple terms, Aeries helps other companies manage their business processes. They are a technology services and outsourcing firm. Imagine a big company that needs to streamline its finance department, or manage its supply chain more effectively, or build a custom software application. Instead of hiring a huge internal team, they can hire Aeries to do it for them. Aeries provides the experts, the technology, and the manpower to handle these complex back-office functions, primarily for clients in India and the United States. This company came to the public market via a SPAC merger, and like many SPACs, the stock has been a disappointment, trading down significantly since its debut. It's a crowded field, but a massive market. They are trying to position themselves as a nimble and specialized alternative to the outsourcing giants like Accenture or Infosys. This is a brutally competitive industry. Aeries is a tiny player going up against behemoths with deep pockets, global brands, and long-standing client relationships. Can they win enough business to grow and become profitable? Can they differentiate themselves in a meaningful way? That is the billion-dollar question for investors. My verdict on Aeries Technology isn't a void for now. It's a wait-and-see story. I call this one penalty box. The company is too new to the public markets, and its story is not yet compelling enough to jump in. The competition is just too intense, and I don't see a clear, defensible moat around their business yet. They need to prove themselves. Stay on the sidelines with this one. Put on your hiking boots, because we're going off-road with Expion 360, ticker XPON. This is a fascinating little company that designs and sells high-end lithium-ion batteries, but not for your phone or your electric car. No, they focus on the mobile power market. Think RVs, camper vans, boats, and off-grid cabins. They make the powerful, long-lasting battery systems that let people run their lights, refrigerators, air conditioners, and electronics when they are out in the wilderness, away from any power outlet. They are tapping directly into the massive and growing trend of outdoor recreation and the van life movement. This is a micro-cap stock, and it's been on a wild ride. The price has been all over the place, which is typical for a company this small. Expion 360 is trying to build a premium brand in its niche. Their batteries are designed to be more powerful, last longer, and be more durable than the standard lead-acid batteries that have traditionally dominated the RV and marine markets. They sell their products directly to consumers, through dealers, and also to original equipment manufacturers, OEMs, who build the RVs and boats in the first place. Getting those OEM contracts is the key to explosive growth. I like this story. I like it a lot. For Expion 360, my call is a speculative buy. This is a direct play on a powerful consumer trend, the desire for freedom and adventure. People are spending more money than ever on RVs, boats, and outdoor gear, and all of those toys need power. XPON is providing the picks and shovels for this modern-day gold rush. I'm a buyer. Let's talk about a business that pulls at the heartstrings. Inspire Veterinary Partners, ticker IVP. This is a company that is in the business of buying and operating veterinary hospitals. It's a simple, beautiful business model. They find successful, established vet clinics, often owned by veterinarians who are looking to retire or sell their practice, and they acquire them. They then provide centralized management, marketing, HR, and technology support, allowing the veterinarians to focus on what they do best, taking care of our pets. It's a roll-up strategy in one of the best industries on Earth. This is another micro-cap stock, relatively new and unknown to the wider market. The company is in acquisition mode, trying to grow its network of hospitals across the United States. The thesis is that the veterinary care industry is fragmented, made up of thousands of small, independently owned clinics. IVP believes it can create value by bringing these clinics together under one corporate umbrella, achieving economies of scale and professionalizing their management. People spend money on their pets in good times and in bad. It's a resilient, recession-resistant business. That's the appeal. We love our pets like family, and we will pay whatever it takes to keep them healthy. This creates a steady, predictable stream of revenue. Here's the final word on IVP. I'm calling this one a buy. I love this industry. The humanization of pets is a secular trend that has decades of runway left. People are spending more and more on high-quality healthcare for their animal companions. This is a long-term story. You buy it, you put it away, and you let the power of our love for pets work for your portfolio. Buy. Now for a special segment. A 2-for-1, we're looking at AVT. But there's a catch. There's Avnet, the big electronics company with the ticker AVT. And then there's Aventus, the crypto project with the token symbol AVT. They are completely different. Let's break them down. First, Avnet, the stock. This is a giant, a legacy player in the technology world. They are a massive distributor of electronic components. Think of them as the ultimate middleman. When Apple or Ford or some medical device company needs a specific semiconductor, connector, or sensor, they often buy it from a distributor like Avnet. Avnet is a cyclical, industrial-style business. Its fortunes rise and fall with the global economy and the demand for electronics. The stock, AVT, is what I'd call a steady eddy. It's not going to shoot to the moon, but it's a solid, profitable company that often pays a dividend. It's a value play, not a growth play. Now, let's flip to Aventus, the crypto token, also known as AVT. This is a blockchain project focused on solving real-world problems. They're working on things like making event ticketing more fair and transparent, loyalty programs, and even helping with aviation supply chain management. It's a utility token designed to power a specific enterprise-grade blockchain network. Here is my verdict on this doubleheader. For Avnet, AVT, the stock, I'm calling it a hold. It's a fine company, but it's not exciting. In the current market, I think there are better places to be for growth. Now for Aventus, AVT, the crypto token. This is a speculative buy. I like their focus on real-world business use cases. It's a long shot, but if they can land a few major partners, this token could see explosive growth. It's a small part of your speculative crypto portfolio, a bet on blockchain moving beyond finance and into the real economy. Whew, what a ride. We've covered wind blades, biotech, Bitcoin miners, and batteries for your RV. My head is spinning. But this is what it's all about, people. It's about doing the work, turning over the rocks, and finding the stories that Wall Street has ignored. The ideas we talked about today are just that. Ideas. They are starting points. They are not a substitute for your own due diligence. Your homework starts now. When you're dealing with these smaller, more speculative companies, you have to remember a few key rules. First, position sizing is everything. You don't bet the farm on any one of these names. No, no, no. You take small, speculative positions. This is the part of your portfolio where you can afford to take some shots, where a single winner can pay for 10 losers. Think of it as your mad money account. Second, you must have a long-term time horizon. These turnaround stories and growth sagas don't happen overnight. You have to have the patience and the conviction to hold through the volatility. There will be scary headlines. There will be days when the stock is down 20%. If you've done your homework, these are buying opportunities, not reasons to panic sell. You have to be able to stomach the swings. If you can't handle the heat, stay out of the kitchen. Finally, always know your why. Why did you buy this stock? What is the core thesis? Write it down. Is it a turnaround play, a bet on a new technology, a play on a demographic trend? When the stock gets hammered and fear is everywhere, you go back to that piece of paper. Has the story changed? Or is this just market noise? If the story is still intact, you hold on or maybe even buy more. If the story is broken, you sell, take the loss, and move on. Don't fall in love with a stock. Be disciplined, be patient, and do your homework. Now go out there and make some money. Booyah!